Hey, this will be a video chart on MOPN, MOP Environmental Solutions. Want to do this one for a couple reasons. Been getting a lot of requests on it, but more so because it makes a really good example of how when you use your support levels and measuring whether or not something is a healthy consolidation, how it can really lead to even bigger profits. So let's kind of just go through the psychology or breakdown of the chart. So we initially had a big volume surge here, had another big move, and then had the red day. And red day was less than the breakout day, which is okay, is good. But the key at this point was, is it going to hold above our key areas of support? And really the main one, as it always is when you're that close to it, is this orange line here, which is the 200-day simple moving average. So that was a key support area where ideally you'd want to see this hold, but you had some other support areas. 5 cents right here was a previous high where you could have nibbled on some shares on any sort of pullback, which this day begun. Here you had another one. You noticed that it dropped down, didn't quite hit the orange line, but close enough, and you could safely call this candlestick right here a hammer candle. So that's always a good thing to see. Once again, decreasing volume, and that's the name of the game when it's coming to pull back prices. And then today, the thing just blasted off again, had huge volume to support it. So this is just, if you were to open up a textbook, this is what you'd want to see. Big move, then when it pulls back and consolidates, you have decreasing volume, and then on the next up move, just huge volume. So the thing was just a monster today, up, over 400%. So, congrats to everybody. And unfortunately, I wish I could sit here and tell you that I was playing it, but I wasn't. So, oh well. But now, what I'm pretty much going to do here is spend a little bit of time on this. Then we're going to have to go to the weekly chart so I can find some other areas of resistance. But right now, the kind of new area of key support, kind of replacing the 200-day, because obviously the 200-day is way too far below where it is now. But this is kind of the must-hold level, whereas until today the 200-day was a must-hold level. This is going to be the new one, so I'll make this extra thick. This level is here at 9 cents. And really, if this is a truly strong move, this level should have no problem holding, just like here. If this initial move was truly strong, the 200-day shouldn't have had any problem holding. It didn't have any issues, and you can see the results. So same concept here. If this is a truly strong move and it's going to be able to make another bullish move to the upside, then this 9-cent level here really does need to hold. So keep that in mind. 9 cents is the key level. Now we're going to have to go to the weekly chart and go on a little Easter egg hunt, try to find support levels. So we'll see how much, or excuse me, resistances. There we go. So you can see that we have to go back quite a bit of a ways to find support levels, resistances. There's another support that we have right here, was broken. You can see back on the chart. Here it acted as resistance. Here it acted as resistance. Here it was acting as support a little bit. Obviously just bursted right through it today. So another support level is going to be right here at 11 cents. Now once again, if this one doesn't hold, no need to freak out. It's just another area of support. And we have just one more right up here where the price had some previous highs. This level is at 15, and this would be kind of best case scenario. If somehow the bulls could manage to hold this one and never let the price drop below it, that would just look insanely bullish. But definitely don't freak out if you do see it close below it. It is a support, but at the same time, you didn't close too far above it, so a break back down below, wouldn't be anything, crazy. As far as resistances go, as you can see from the chart, really it's essentially a blue sky breakout. We do have 20 cents here now as an area of resistance, just because that's where the profit taker stepped in today. But I guess you could consider 25 cents an area of resistance because we do have a previous high there. But I think for argument's sake, you might as well just say it's essentially in a blue sky breakout. Past 20 cents, we do have that now. But after 20, blue sky breakout, so it's pretty much as high as the bulls want to take it and as high as the profit takers want to take it. Obviously, there are some people that decided to start to lock things in up here at 20. Which knocked the price back down. But once again, if the bulls can get back above 20, it's the same situation where the price is going to keep going up until profit takers decide to step back in. So overall, good looking chart, makes a great example, and congratulations once again to the people that were accumulating shares on that pullback. So if there are any other questions on the chart, please let me know. If not, I'd encourage you to check out bullwarriorstocks.com. If you go there and sign up for the free newsletter, you'll be sent a free ebook, and with your newsletter subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from penny stocks up to big boards. So there's a good variety, something for everybody, and it's all free. We've been making some good money together with our trade setups and so forth. So I'd encourage you to go to the website, sign up, and see what it's all about. One last time, this was MOPN. Thanks for listening.